Hey there, everyone. Welcome to The Final Bar. I'm your host, Dave Keller. I'm the Chief Market Strategist at StockCharts.com. Actually, in Ireland at the moment. We recorded these last week to highlight top 10 charts to watch for August 2024. I'm on vacation, but figured it would be cool to leave you guys with some ideas to think about through the remainder of August. On our first episode yesterday, we talked about two magnificent 7 stocks, NVIDIA and Meta. Key levels, they're actually pretty range bound at the moment. We have clearly defined resistance, clearly defined support, and levels to pay attention to. Today, we're going to get defensive. We're going to talk about the traditionally defensive sector of consumer staples. And the reason why I think it's an interesting proving ground or interesting area to consider as an investor is because consumer staples have been so underwhelming and so underperforming for so long. It's important. I think one of the great benefits of charting and technical analysis is the charts tell you when an idea has been out of favor and then it starts to come in favor. And I think that's what's so important about some of these defensive plays that we're going to talk about. So, as we did last episode, I'll share with you the 2 charts to watch. We're going to talk about Campbell Soup Company, CPB, and Clorox, CLX, consumer staple stocks. We'll talk about why these charts are important, and then I'll share with you one tool on StockCharts that I used to help identify these names. Let's talk about the charts in particular first. I mean, what's interesting about the markets here in August of 2024, and we're recording this mid-August, is the fact that you've seen quite a change of character, what I like to call it, or certainly a change of leadership, right? At times in 2024, and in fact, much of 2024, especially coming out of the April low, was the dominance of the mega cap growth stocks, right? Kind of everything else struggling a bit, and those names doing so well. This is what propels our benchmarks, which are very growth oriented, to new all-time highs, makes them look remarkably strong. Consumer staples is an area of the market that has been underperforming. While those mega cap growth stocks have done well, consumer staples arguably one of the worst performers. So the charts that I'm showing you here, these two actually have not been particularly strong charts until recently. And I think, again, when I think of the benefits of technical analysis, we can debate all day what could happen, what should happen, but for me, technical analysis is not a crystal ball. Carl Swenlin, longtime StockCharts contributor, would say it's a windsock, not a crystal ball. I think that's a decent analogy, decent metaphor to use. I would just say what technical analysis is more of the truth serum for the markets. It's not about what should happen or could happen. It's about what is happening. The charts are defined by price, and price is fact. That's what happened. And so looking at changes in price tell you changes in sentiment and indeed changes of character. CPB is one of those stocks that did actually quite poorly in 2023. It did bottom out in October, but when you think about the major benchmarks, 2023, pretty decent. You had the pullback August, September, October, but off of an October low, these stocks ripped to the upside. Campbell Soup remained fairly weak. Now, it did have this broad sort of rounded bottoming pattern, I guess, for lack of a better term, certainly a basing pattern of sorts. It was quite a long transition from distribution to what we see now as an accumulation phase. I would say late 2023 is more consolidation. We're sort of finding an equilibrium, really buyers and sellers generally in agreement for months and months. The market's telling you the stock's worth about $42, $43 a share, and we're just kind of chopping above and below that equilibrium price. But look at how the momentum's changed in the last couple months, right? We've gone from an RSI between 40 and 60 to an RSI generally above that range and really not getting much below 50 since mid-June. We have prices that were sort of sideways. We had clear resistance around 44 to 45. We had clear support around 40, secondary support around 42. But all of a sudden that range has been broken. And now when you start on the right side of the chart and look left, and pro tip, that's why this show's called The Final Bar, because I always teach people read from right to left, start with the final bar, and then look to the left. So if you start now and look to the left, I would argue you see a primary uptrend, right? What marks a primary uptrend? Charles Dow, over a century ago said an uptrend is a pattern of higher highs and higher lows. That's why we track the peaks and valleys in price and look at their trends over time. What's important about the chart of Campbell Soup is that we've made a pattern of higher lows, and it really has been since early June we've been able to pound out that pattern. So I like stocks that are in a primary uptrend, making higher highs and higher lows. The reason why I think this is an important chart to watch is to see if that trend would continue. I have no problem following a stock like this as it accelerates to the upside. As long as it keeps making higher highs and higher lows, I think it deserves our attention and arguably deserves our capital as well. So we have a most recent swing low around 48. We have a previous support around 45.50, below there around 42. Those are your last three major lows. We keep making new swing highs, and again, watch that pattern to continue. I'd be interested to see if the RSI can remain above 50, and if it does, that just means any choppy noise we have is just noise. It's not really a change of character. The RSI pushing below 50, even more concerning, breaking below 40, would tell me, okay, maybe something's a little bit different. But I like a chart like this that's in a primary uptrend. The fact that it's happening in a fairly defensive name like Campbell Soup is an interesting point. We'll come back to that in a little bit. The other chart I will highlight today, and this is number 4 for the week, is Clorox CLX. This is cleaning products, household goods sort of name. Less of a primary uptrend just yet. But what I like about Clorox in mid-August is we gapped higher off of support, right? So Clorox sold off from a February and March secondary peak. We sold off to make a low around 126 in 127 in late May. From there, we traded up to the 200-day moving average, and look how we failed to eclipse the 200-day a number of times and then pull back down. Now we're testing support once again around 127, 128. What's happened in the last couple weeks here going into mid-August is we gapped higher the first week in August and now are continuing to move to the upside. I would say upside for now is a bit limited because we have clear resistance here around 155. That's about 10 points above current levels, 11 points above current levels as we're recording this. So the fact that we've gapped higher and showed additional movement to the upside is what's most important to me in terms of this chart. When we have a gap like that, means earnings or some sort of news event that causes stock to gap higher. We've seen that a lot with earnings recently. You saw that last week with Starbucks that gapped higher when a new CEO was announced. So gaps happen on the charts of stocks. And while it can be difficult to predict where a gap is going to occur and which way it's going to go, we can always track the behavior afterwards to see what it tells us about investor sentiment. The fact that we gapped higher and now are seeing additional buyers come in, that means people are willing to own Clorox up here in the low 140s as opposed to just down in the 130s. The fact that additional buyers are coming in as reference or as defined by price going higher, momentum improving, relative strength improving, those are all signs of accumulation. So I think a chart like this is a compelling chart as long as we keep making higher lows, which means 140 is where I'd be setting a tactical support level or a tactical alert. I'd also be looking at the 200-day moving average, which is just slightly below that level. I'd love to see if the RSI can remain in that bullish range, not getting below 40 or 50 on pullbacks, getting above 60 on rallies. That's kind of what you would want to see. And then if we do see further accumulation, what do we do relative to those previous peaks? And I think a chart like Clorox is good until proven otherwise. And now that we've gapped higher above upward sloping 200-day moving average, that's pretty concerning. Both of those charts that I mentioned, by the way, CLX and Campbell Soup CPB, both have a decent dividend yield. They both have an above average yield. They're not excessive. It's not like a REIT or some banks that have really high yields or something like a pipeline company, which has a ridiculously high yield. But it is a decent income component. That's one of the challenges with growth stocks is when they don't have a good price appreciation, they don't have capital growth, there's not much left in terms of justification for owning the stock. When a stock like Clorox is sideways, but it continues to churn out a decent dividend every quarter, it's not too bad, right? Things are not too bad at that, given that income component. And if you're concerned about market instability, if you're concerned about the magnificent trade maybe struggling going into a potential September or October low, which has been pretty common for the major benchmarks, being in defensive areas of the market, particularly higher yielding areas, can be a pretty effective way to outperform during that environment. So I did want to point out, just to wrap up this episode, is talking about something that I use to identify these two names. And honestly, it's the Market Movers widget. The dashboard, which is really your homepage as a StockCharts member, has a lot of great information. I have this literally on one of my monitors in my home office. At my office, I usually have this on one of my monitors at all times because it's sort of the way that I just check in on market conditions and see where we're at. And it's a good launch pad to launch into further analysis on key themes and charts that I want to pay attention to. Now, this whole thing is very customizable. By the way, we have a release coming up here, hopefully very soon. I'm hoping in early September, but I don't want to commit to that just yet. We'll see how the developers can get things out, but hopefully very, very soon in the coming weeks. We'll be able to announce improved dashboard capabilities, including further customization, some sample dashboards, which are going to allow you to customize this even further. But you can't click on the gear icons and then click on the little more item in the upper right corner of any of these widgets to bring in some of the other dashboard items you may not be familiar with. Market movers is just an easy way to focus on stocks that are on the move. And I think one of the benefits of a platform like StockCharts is making sure you don't miss something. So every day I'm always looking at what's up. I'm looking at what's down. I usually leave this as the S&P, but you could drill into a particular area of the market if you like. But I like focusing on those names that have popped up. And on this day, for example, while we're recording this episode, I'm seeing things like Kellogg, Allstate, Cardinal Health. These are, consumer staples. These are financials. These are healthcare names. And recently, I saw a couple consumer staple stocks, actually a bunch of them pop up on the market movers. And it made me think, ooh, if consumer staples are having decent up days, that alone is not enough for me to determine that this is a good actionable idea. But then I click through to the chart and actually look at the chart of Allstate or Kellogg or whatever I'm seeing, Kellanova that is. And actually see what the chart is telling me. That's what drew me to these two stocks, Campbell's and Clorox. That's what drew me to think a little bit more about the dynamics and recognize how much the trends have had changed. A lot of times we have a narrative, we have an idea of what the market is doing. Something like the Market Movers widget help us focus on not just what we think might happen, but what actually is happening. So make sure you customize your dashboard as a StockCharts member. I think that's where the platform can really help you make sense of these markets in uncertain times. That's it for this episode. Those are our third and fourth of the top 10 charts to watch in August 2024. You want to know what the rest of the 6 are? Keep watching Wednesday, Thursday, Friday. We have more episodes hitting on some of the key charts we're watching and what tools you can use to better navigate these markets. For StockCharts in Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a great week.